Afternoon. How is everybody? Afternoon, Evil. XO Update.news, Virginia, Mumo, Emac, Fletch, Kennelly, Gregors. It's time. How are we doing? It's Wednesday afternoon. Afternoon, Mark. And it is PMI day. We've had non-farm employment change this morning, or rather this afternoon, which came out as positive. But yeah, it's the PMIs in a bit. So we will watch and see what happens with that. So not sure we're going to get a lot of movement today, to be fair, because obviously it's FOMC this evening. So this evening is the big one. We'll see what happens. Afternoon, Amy, Gina. So yeah, we'll see what happens this afternoon. I'm not expecting a massive movement. We might get some volatility. But I wouldn't expect there to be a huge move in the market today. But we'll see what happens. So we'll watch something like Euro US dollar and see if it moves. But obviously the market's waiting to see what FOMC is this evening, because it's a big one today, because we've got not only got the statement, which is going to the Fed fund rate, which is going to be 5.5. And the statement, but we've got the press conference, and this is the big one. So the press conference is the days when we get FOMCs. The press conference ones are the ones that actually tend to potentially really kick the market. So we will see what happens with that this evening. So as you can see today, Aussie New Zealand, we've had some movement on. Excuse me. So this morning, or rather overnight, 11:45 last night, we had the unemployment rate for the New Zealand dollar. That came out as expected. So we were forecasting a 4.3. We got a 4.3. So basically the market just rallied, or rather dropped the New Zealand dollar and then undid it. Literally within 2 hours, we were back to square one. Absolutely nowhere. We had a big spike down on the swap. So that potentially wasn't even an ADR hit today. So as you can see, the New Zealand dollar, just a kind of V-shaped recovery there on that one. Not really done anything. It's amazing how dormant the yen's gone. Total shock. Like no one's interested. Just not interested. Scared to death of the Japanese. US dollar rallied yesterday, obviously, towards end of day. We've managed to do 50% retracement into the propulsion move. Not even 50% retracement yet. It's getting close, but we haven't gone anywhere. So if this is going to be the same as previous interventions, we will see that for a while. And then obviously, potentially a huge move down. But the Fed have the opportunity today to do something with this. So if we get a massive bull move out the US dollar, it'd be very, very interesting to see what happens if we get that 150 ADR today. If we get that, we're back up here. So what have the Japanese got left in the tank? We'll have to wait and see. Obviously, if the Fed talk it down, depends what Powell says, but if the Fed talk it down, obviously, it's not an issue, is it? So it'll be interesting this evening to see what happens with that. The other thing we've got this evening is Macklem speaking as well at 9:15. So there's an opportunity there for some movement off the CAD. Macklem doesn't talk very often. So it's all ears when anything comes out of the Bank of Canada. So we'll see what happens there. But first of all, obviously, we got the manufacturing PMIs coming out, and then we got the ISMs, and then we got JOLTS. So between 2:45 and 3, it's going to get busy. So that's the only ADR we've got today. There's nothing else there. Afternoon, Franco, Nav. We've got no RSIs on the hourlies, so they're all flat. Nothing's moved much. I'm going to show you some research I've been doing with a position trader EA in a minute, which is very interesting. It's a variation on a strategy that I've known about for a long time and dismissed. And I've found an edge in it. Well, might have found an edge in it. We'll find out. But it's based on RSI still. So 4 hours, very little on the 4 hours, as you can see. Euro Swiss is extended on the 4 hour. Still got 10 minutes. So that is extended to the upside. So potentially looking for a pullback on this leg. Coming up to lovely resistance as well, which may well hold and obviously just drive back down into here. We are expecting Euro to be bearish, obviously, in June. We'll have a look at the rest of the day's news in a minute because we had some news out of the pound today as well. Pound CAD, nice. We looked at this one yesterday and I said, you know, that is a very good area of resistance. We tested it yesterday and it's rejecting. So I've got a short on that already at the moment. Pound Swiss popped out those highs. It is rejecting now. We've got a big bearish engulfing just gone in on the 4 hour. So looks like a liquidity grab at the highs and no more sellers available up there. So pulling back. That whole thing there is basically one move because we had a gap down there. So you can ignore that. That's kind of a little bit of an accumulation there. So you've had a rally, accumulation, rally. So that whole thing's got a pullback on it from a double top. So looks like a very good short opportunity there. Extended on the 4 hour. Pound New Zealand also extended on the 4 hour. That's come off. You've missed that. I'm already in that one with one short. US dollar CAD. Again, big extension, 4 hour. Not big. I mean, it is just extended on the 4 hour. So looking for a pullback here. But obviously, anything to do with the US dollar CAD or the US dollar Swiss today is all going to be FOMC based. And potentially off the PMIs this afternoon. But US dollar Swiss, this thing broke out again this morning. I closed it. It's done with it. Cannot get a break on this US dollar Swiss. So that's my final Swiss gone. I'm out of the Swiss for the moment, and I'm staying flat on the Swiss and the yen for the moment until things calm down. Because it seems to be only the Swiss and only the yen moving at the moment. The rest of the planet is just basically going like that, which is fine. Everything else is working, no problem. Just that. Aussie New Zealand I've still got running as well, but that's completely frozen as well. So sitting there waiting for the pullback on that. So yeah, so those are your RSIs. Nothing particularly exciting today at all. So. I'll show you what I'm working on at the moment. Let's just have a quick look at the indices. Nice break out of the pre-market range on the Dow. Straight up to target. That's nice. Depends what your target is, but nice break, clean break on the Dow. S&P not really gone anywhere. NASDAQ not gone anywhere. So I wouldn't expect these to be actually particularly big moves at the open today because obviously we've got news coming up, so it's more likely they're just going to hold until the news, but that's a pretty good break there. So we'll see where we go with the PMIs. We've got 5 minutes to go. Morning Dougal, US dollar first news in 7 minutes. Yep. David, afternoon YV. So I was looking at a I won't cover the strategy now, we'll just wait for the news to go, but I'll show you what I was doing in a minute. Where are we? Pound. Where have you gone? So we had this come out this morning from OIS. The Bank of England rate cut no longer fully priced in for September. Doesn't say whether or not that means it's going to be pushed back or brought forward. So not very helpful, but September was kind of this speculative potential drop date. And that is being put into question now. I'm not quite sure why we've had this news today because there hasn't been any pound news that would really give the market a reason to change its mind today. But we're not looking at September now, apparently. So whether that is pushed back to October or whether it's brought forward to August, we'll have to wait and see. We know we're going in June with the euro. I would expect if we get a good CPI number coming out in May, that we would be pulling it forward, but we'll wait and see. So that was the only news from this morning that was of any interest, really. And excuse me, the only other news we've had is obviously unemployment came out. It's virtually as expected. It's ever so slightly larger than normal, but not massive. Treasury, we do not expect to increase nominal coupon. That's not really relevant to FX so much. So no other news this morning. So we'll wait and see what happens. But that was interesting on the pound. I was watching the pound when that came out. We didn't get any movement off of it. We did it a little bit, but not dramatic. So I would expect, and it obviously depends how you take that. If it was, we're not going for September now, we're bringing it forward to August, we'd be seeing that. If we're pushing it back, same as the US, we'd see a rally in the pound, but no real impact so far. So wait and see on that one. But yeah, still no confirmation basically on what's going on with the pound. Morning, Libby. Afternoon, even. Right, we've got 3 minutes to the news. So these PMI numbers today are kind of inflationary figures. So we've got the final numbers coming out, and then we've got the ISM figures. So these are leading indicators. They are to do with inflation. They form retail inflation. So these are kind of your commercial inflation figures. So these being higher than anticipated will tend to mean you want more interest rates, which will push interest rates back, which makes the US dollar bullish. Coming out lower than expected means that retail inflation is likely to drop as they drop, which means interest rates can move down sooner, which is bearish US. So it could be either or, obviously. We'll have to wait and see what the figures are. But the likelihood is, I think today, more of that than any direction, because no one's going to want to do anything until that press conference is released later. So we'll wait and see what we know the Fed fund rate is going to be 5.5. It's not going to be anything different, but it's what happens here. So we should get some volatility, but directional bias, I doubt. And jolts, it's going to have to be massively out for that to do anything today. So we watched the Euro US. We got 30 seconds, and we'll see where it goes. Afternoon, Cron. $20 seconds to go. There's no spread coming in either. So there's very little volume interest here at all. None. There's no spread widening or anything. There's just no volume coming in at all. So that's a non-event. 50 off of a 49.9 forecast. So as expected, nothing of interest. So we'll wait and see what happens with the ISM PMIs at 3 o'clock. But no impact on anything at all there. Indices starting to come down a little bit. S&P starting to drop. Dow starting to drop. Nasdaq's holding at the moment. It's a massive earnings fortnight at the moment as well. So this week we got all the big releases this week. So yesterday we had after market, we had AMD, Amazon, and PayPal. Pre-market yesterday, we had Starbucks, Coke, 3M, etc. We've had ADP pre-market today, Estee Lauder, Pfizer, and we've got Etsy aftermarket as well. Tomorrow is Apple. So we got Cloudflare and Coinbase tomorrow as well. So there's some big names this week with earnings, but we are just not getting the volatility. I was reading an article on a website. Can't remember if it was on II. Might have been on II. Can't remember. Don't know. But I was reading an article about the volatility this year which just happened to come out yesterday. And as I was saying, in the last couple of weeks, it's been down 35% so far, stock indexes. FX is down just over as well. So everything is down volatility-wise. Volume traded, everything has dropped this year. And it doesn't look like it's picking up. And the article was basically, is this the new norm? I.e., we're not going to get the volatility we're used to anymore, which means contracted ADRs and a lot more range-bound movement, which for us as position traders, more than happy. But, it's speculation as to whether or not that's going to return to normal when the interest rate drop starts. The article was just, wasn't so much moaning, but, going, and it's always when you have these weird scenarios in trading where things are not normal, you're always looking for someone to blame or something to blame for it. And it was kind of, it's down because the banks are not doing X, Y, Z, the usual stuff. Someone's looking to blame someone. But, it's just a case of, is it coming back? Are we going to get out of this ridiculous situation of a news event and nothing, which is basically what we've had all year, isn't it? It's just been unbelievably difficult trading conditions. But anyway, so we'll find out, won't we, when the interest rates drop. Are you trading your index EAs? Yeah. So this is stock index Hedge EA. I'm trading. I'm only trading with very low risk at the moment and very low targets. As you can see, the Dow target is just over 1R and break even. So tiny profits. Just looking for quick scalps. So all what we're getting at the moment is this. A lot of this. Yeah. A lot of this. You get the odd day, but the vast majority of it is this. And if you look at the last few weeks at least, a 1R move at the open is happening. 2R. Anything over that, it's just not giving any volume or volatility at the open at the moment. And as I say, this is because volume is down 35% year on year. We're down. So there's not enough orders coming through on that initial cash balance to drive the market. That was good today, but that's all you get. You see so much of that, and then it breaks back down. You're better off at the moment, mean reverting anything that is a 1 or 2R from the pre-market open and shorting it, because that seems to be the play at the moment. But obviously that will change, and it's hit and miss. But you're just getting back into it with very low volume at the minute. Or very low risk. But as you can see, it's dead. It's like they just decided not to bother anymore. But it does have these rallies, these beautiful rallies. But they are, again, it's very much like Forex at the moment. It's the same sort of thing. We are getting an awful lot of rally and then sit around for days. And these days you have to get in and get out and be done with it within 10 minutes, because that's all you get. You just don't get any volume unless you're going to scalp on M5 and sit there all day and try and grab tiny little moves, which is fine, but not my idea of fun. Yeah. What's this new edge? Secret. I'll tell you in a minute. Markets are waiting for the US election. Hope not. That's bloody 6 months away. Mind you, if you think about it, we're going into summer trading in 2 months, 3 months. So I can't sit through this all year. Hence, I've been looking at another variation on the strategy, which I'll look at in a sec. Depending on the next president, there's more insight on potential wars or economic conditions. Depends who gets in, doesn't it? At the moment, one of them's going to prison, so it won't be him. He'll get off, won't he? He'll get off somehow. I think people are only interested in top 20 or 25 firms now, the ones that can spend billions on AI. Yeah, so that article that I was reading, one of the portions in that article was concentrating on the top 5 firms. The way that it's always worked with stock indices is never find the article I want whenever I type this in. But basically, the indexes are obviously weighted. So the price weight index, just anyway. But yeah, so not all stocks are equal. Obviously, the stocks at the top make up. So the top 10 stocks will make up 90% of the movement in an index. So if Apple's shares go nuts and everybody else's collapses, it'll still go up because Apple's weighting is more than everybody else in the entire index. So if that drops so that the weighting goes down to those top 3 or 4 stocks, it doesn't matter what any of this does. What we used to get was an awful lot of volume coming in into all individual stocks and sectors. That doesn't seem to be happening at the moment, which doesn't mean it's not going to continue and come back again. But at the moment, it seems that it's sector purchasing is not happening in the droves that it used to, which means those top stocks are being traded a lot. But once those trades are in, there's no more liquidity. It's just dried up. That's why we're getting like virtually no movement. So if there's nothing happening on Apple, nothing happens on the NASDAQ. Simple as that. That seems to be what it is anyway. But this is all it's all speculation because nobody actually knows. You can see the volumes traded on the top indices, on the top stocks in the indices, and it is dramatically larger, but it always has been. But overall volume is down. And it says it's not just stock indices, it's down everywhere. Everything, all trading is down. So yeah, I think it's banks and institutions obviously are just not in the game as much at the moment. With volatility down, this may be the perfect condition for the H1 hedge strategy. Yep. But when it picks up, it won't be. This is the thing. This is what we're in at the moment is a period where you've got ADRs like this. ADRs will do this. Yeah. At the moment, we're in a low volatility range-bound market. Mean reversion strategies work very well. Range-bound strategies work very well. Trend-based strategies, they're dead. Dead in the water. They're not working. There's no ATR, ADR. There's no trends. Yeah. When we go into a trend market, the hedging strategy will struggle. Yeah, it's horses for courses. You're going to have, this is why in all back tests, you have periods of stagnation. And then it carries on. This period of stagnation is market conditions not being correct for the strategy type, of which there is trend, breakout, and range. That's it. So it either meets one of those criteria or it doesn't. At the moment, the SIH strategy is struggling because there's no volume. You can't have a momentum breakout strategy with no momentum. It doesn't work. Yeah. Trend strategies are not working in the stock indices at the moment. Yeah. Higher time frames there will be, but lower time frames they won't because we're not getting breaks and continuations. So it's just conditions are always going to be different, which is why it's important, ideally, to run multiple strategies, which is why I settle on mean reversion, because mean reversion works in a trend and it works in a range. Yeah. 80% of the time, 70% of the time, the market is range bound. When it's trending, as long as it's trending nicely, mean reversion still works. So we can trade all conditions all the time, most of the time. But, we need volume. We need volatility. There's no use getting into something and going, I'm going long, and sitting there for 2 weeks. This is what we're getting at the minute, isn't it? It's not even enough movement up and down to get out of a range-bound trade. It's just pitiful. But hence, me looking at a variation on the strategy, which also works very well in any market condition. But it needs a little bit of work, which I'm working on. They are considering US stock market going 24/5, so no open to deal with. Are they? That'd be interesting. I've not heard that. That'd be interesting if they did that. I mean, I wouldn't be surprised because if you go and look at the floors now in Chicago, there's nobody there. There's about 3 or 4 guys sitting there on keyboards in the pits. It's all electronic. There are no pit traders anymore. Half of them are teaching, but they're teaching on technology that they don't know how to use because they're open outcry traders. So yeah, it wouldn't surprise me if it does go 24/5. It would screw. But the thing is, how are you going to handle the overnights? I suppose there wouldn't be any overnights, would there? They'd have to change the margin requirements if they did that, but will be interesting. Stuff changes. You have to adapt. One thing I've learned about watching you is that you're able to identify the type of period we're in. Yeah, but usually too late. This is the problem, isn't it? You've got to adjust. Well, you don't have to adjust your strategy. You have to adjust to the periods and accept them. Switching from 14 to 21 RSI, etc. Yeah, it is something that will help, but it will also hinder when the market takes off. So, but you have to accept the conditions that the market gives you. I've said many times, and it is 100% true, there is no strategy that makes you money. The market makes you money. Your strategy extracts money from market movement. Market movement changes. Your strategy doesn't. Yeah. So when the market conditions are not right for your strategy, you will stagnate or lose money. When the market conditions are right for your strategy, you will make money. This is why people system hop. You get a strategy that you leap on for 3 weeks, 3 months, whatever time period it does fantastic because the market is trending. The market goes into a range and the strategy fails, stagnates, or loses money. So you go, looks good, but it's not. I'll change to a new strategy. Nothing wrong with the strategy. When the market starts trending again, strategy will work again. You can't accept the losses or the stagnation because you are in the mindset of needing to earn money every week, day, month. That isn't how it works. The market will hurt you for days, weeks, and months on end, and then it will pay you massively for days, weeks, months on end. You can't control when that happens. The market moves when the market wants to move. The moment, the market doesn't want to move. So if you drop whatever strategy you're trading now and go, right, I'm just going to do range-bound trading, it will break out. And your range-bound trade will fail. And then you'll go, crap, let's go back into trend trading. It won't. It looks like it's starting a trend, but it will just go back into a range again. And you go, oh, I'll go back to my range-bound strategy. And you will just keep flip-flopping and you will never make any money. You have to sit there through the crap. And if you've been doing it for a long time, you know, you sit through the crap and eventually the crap becomes gold. But you can't control when it arrives and when it leaves. At the moment, this is all about interest rates in Forex. They're not giving us any information as to when things are happening, apart from the euro, which we know now you do not want to long it. Apart from that, we don't know anything about anything that's going on. So you can't just change your strategy because the market has changed to we're not moving interest rates anymore. Because in June, when they start moving interest rates anymore again for the next possible 18 months, your strategy that has been trading well for the last 12 months when we haven't been doing interest rate changes is going to fail. You just have to sit through. You can't sit through a year, obviously, because you need to pay yourself, which is why mean reversion is good because it still makes money the vast majority of the time. News out. Euro US, we're on. Big spike. Oh, there's some volatility. Look, ISM. So that's bullish. Bearish euro. Bearish US. Looks like an as expected to me. A lot of volume coming, but no direction. So 49.2 on a 50. So that's a fair miss. Jolts is also down. So slightly bearish US. We are getting a slightly bearish move against the US, but not massive, is it? Not massive. do not drop. I couldn't bear to have another exit go my way the day after I get out. It would drive me nuts. You can do. Have to sit through it. Anyway, so I find it's important to pay attention to the stats, but work with Excel every day. I'm good at it, so difficult. So it's difficult for many others. Yeah, I mean, basically, back to all the back tests that I do and I show on my stuff. Basically, trying to think. ORB is probably the best one. So, you know, these back tests that I show are a prime example. So this one here, you know, this is a normal strategy. Not doing great, nice little run. Not doing great, lot of stagnation, lovely run. Yeah. If you start trading a strategy here and you have got very little willpower and patience, by the time you get to there, you will be down 5% and you'll have gone, this is crap, I'm off. You'll have flipped off to another strategy just before that lovely winning run that gets you into a lovely profit. You missed it. That was the market conditions that the ORB thrives on. Then you went through stagnation for a long time. Didn't work particularly well on this instrument, but other instruments it probably would have done. So you scrap it. And then you miss that. Yeah. This can't, there is no strategy on the planet that works like that. Because the market doesn't do that. It does all sorts of things. It does whatever the hell it likes, doesn't it? So you can't, you've got to have this in mind. So whenever I'm doing any back testing, system parameter permutation testing, robustness testing, strategy development, I look at a minimum of a 4-year period. And if it has to make money over that 4-year period, consistently with multiple system parameter permutations, that means it's robust. And I can look at it and go, there's going to be a period of probably 3 to 6 months where it's not going to generate alpha. I am not going to pay myself during that period because it isn't going to generate any money. As long as you know that and you're aware of that, when it comes, you're not shocked. But if you're looking for a system that is going to make money so that you can pay yourself every single month the same amount of money, it doesn't exist. Because it doesn't work that way, because the market does not work that way. So it's just where we are at the minute, isn't it? I just hope it's over soon because it's driving me up the bloody wall. Anyway, it's just a whipsaw off the back of that. Market looks like it's trying to slightly rally the US on it, but just a whipsaw at the minute. So that 5 minutes is just a whipsaw. It's ended up slightly bullish US, but as you can see, it's not done anything. So as I suspected, market not really willing to make any runs today from that, because this is what we're waiting for. So this evening, 7:30 is when you're going to get it. So if you want to trade this or understand what happens with this, typically when you get the rate announcement at 7 o'clock, we get some kind of reaction. It's usually something like that. Back to square one. Yeah, because the market knows what that's going to be. It's forecasted it. It's priced it in. So if you do get any volatility, it tends to be a whipsaw, or it tends to be a push up. And during the press conference, the first sort of 10, 15 minutes, they'll pull it back down to where it was. Yeah. So you end up basically back at square one off of the FOMC statement and the rate. Unless there is something in that FOMC statement that the Fed is releasing that we were not expecting, in which case you'll get a move. But it's rare. Yeah, they normally tell us because they want us to price in the right sort of movement as early as possible. So they tell us what's going on most of the time, not at the moment because they don't know what's going on themselves. The press conference then comes out at 7:30, 7:45 to 8 o'clock. You tend to get some kind of movement starting, and then when the press conference finishes, the market will then take off in whichever direction it wants to based on what has been said in the press conference. If there's nothing of interest said that we do not know, you won't go anywhere. But if we can squeeze something out of Powell that gives a directional bias that the market was like, that sounds a little bit more like X than Y, that is when you'll start that move. And that move can obviously be a 100, 150, 200 ADR move. So it's a complete unknown. It always is. But this is what makes the volatility, not this. Everybody that's trying to trade the news is going and trying to trade that. That is going to kill you. That's just going to stop you out and spread you out, one or the other. You're dead. This is what you wait for. And you wait until that press conference is underway. He said his piece, and then you wait for the questions. The questions from the reporters is when stuff gets leaked. So we'll wait until that happens because the market doesn't seem to really want to do an awful lot with this. It is negative US, so if anything, you should be looking at a bear move, but we'll see. But nothing exciting, is it? Took the trade, got the hiccup, in and out. You must be trading second charts, Franco. Well done there. So S&P and NASDAQ, short trades on. Kind of want the US to rally now. Although it's much more likely... Oh, I'm hedged on the S&P. I didn't realise. I'm much more likely we'll get a push to the upside and do a bit of that. Which brings me on to what I've been testing. Tick charts, yes. So let me just see if the test is finished. Excellent, it has. I've got a spreadsheet going with all the results. That got 28. Quarter. Okay, so let's wait for that test to finish. So I've been running a test using RSI2, which is Larry Connor's strategy, which has been around since the 19-somethings, a long time. So basically what this does is I've just tested this over 4 years on, so far, just on 1, 2, 3, 4, 5, 6 instruments with 30 parameter permutations. There's not a lot to it. It's a really simple strategy. But it's an old stock trading strategy. And all it does is it works on the RSI2. But the RSI2 on the daily charts. So I've adapted this to the 4-hour charts using different levels and using the position trader EA to trade it rather than using Larry Connor's strategy. And Larry Connor's strategy was very simple. When you get extensions at a level, he used 90-10, which is a little extreme, which will be better. But the reason I'm looking for this at the moment is because at the moment we're spending a lot of time doing that and no time doing that. So I'm looking for a mean reversion strategy that's a quick in, out, done. You know, just we want to get in and out as fast as possible at the moment with as little as money as possible at the moment. So to make sure it's robust, I've tested it over 4 years. And in that 4 years, we've got the COVID fallout. We've got stagnation. We've got an interest rate rally and a 12-month interest rate freeze. Yeah, so it's pretty much every market condition you could possibly have. We've had a boom, a bust, and a stall in there over the last 4 years to test robustness. And it's been robust on pretty much every single run. I think there's so far, out of all the tests that I've done, there's... how many did I say that was? Oh, no, that's all of them. That's 28. So there's 4... 8, 12, 13. There's only 13 runs in the robustness test that have not been profitable. Every single one of them is profitable. And some of them are eye-wateringly profitable. Obviously, anything massively range-bound is just printing money, basically. So all the strategy does basically is it waits for the RSI2 on the 4 hour to get extended, and then the position trader EA on the 15-minute time frame waits for that reversal to start, and it scales into the positions as normal, half an ADR apart. And all it's doing is it's basically the same as the strategy that I've been trading for years. It's the RSI mean reversion strategy, but it's using the 4-hour time frame on this type of movement. We're looking for half an ADR profit. That's it. Literally, you get in. If it comes down half an ADR, you get out. If it doesn't, you get in again and you wait for it to come down half an ADR and you get out. Yeah. So you're either taking a profit or you're taking a small profit. Yeah. So it either works first time and it's an easy half ADR, or it doesn't work and you grab a quick quarter of an ADR or something like that. But it does not, it's not a traditional position trading strategy in that we scale in and wait. It gets out automatically. If price moves 1 ADR against us, we shut the position. It's gone. Yeah. So the idea behind this strategy is it's, as you can see from the RSI2, it's quick. It's bang, 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 bang. Within 24 hours, your RSI2 extended, RSI2 extended. Yeah. Any kind of movement intraday that does not extend beyond ADR, this thing reads it like a book. When you get an ADR extension, you scale in. If it hasn't done a mean reversion within 24 hours, you shut it. And it still is in additional positions and it waits for that pullback. Yeah, so that period where we got an ADR hit, didn't work, scale in, close that one because it was a loss, get out of the other two. On that, it works beautifully. So it's a really good strategy for the market conditions that we're in now. But as I said, I've back tested it over 4 years, admittedly only across 6 instruments at the moment, across a good cross section of instruments, excluding Swiss and yen, because we know those are trenders. And it's producing decent profits. But as with all strategies, there is a caveat. If something goes into a trend, this gets hurt. So you get periods of bang, 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 stagnation, and you get periods of that. But overall, in a 4-year period, it's a tick across the board. So the question is, this survived very well during the interest rate run. In theory, this should survive well in the interest rate drop. But it's exactly the same as my position trading strategy, except it gets out. Yeah. So we give the position an ADR. If it hasn't done what we want within an ADR, and the second position we've taken hasn't given us that exit within an ADR, we close that one. We carry on scaling in, but we close as we go. So it's doing drawdown control as we go. But the drawdown control means you're never going to be in more than 3 positions at a time, because you're shutting one as we go. Yeah. Which is where you get these big, strong trends that P&L is going to drop. However, when you look at the combined portfolio across all instruments, you won't have many or really any. I haven't done a combined portfolio analysis yet. Still doing testing. But you shouldn't, if you pick the right instruments and you do not overexpose, you shouldn't have a period when there's 2 at the same time rallying because of interest rate differentials. Yeah, there's always a bias somewhere. Whereas what we had with that 18-month interest rate rally was everything moving together. Last 12 months, we've had everything moving together. The next 12 months, we should have everything moving together. So it's been tested through all periods, all market conditions. So we'll see. I need to do more testing on it. So there's your RSI entry. So that was RSI 2 is at 90 on the 4 hour. Yeah. So there you go. Quick in, quick out. Now, the thing that's interesting about this is it's also an always in strategy. Yeah. By the nature of the RSI 2, and which is why Larry used it, although he was using it with the S&P, which is obviously a trend-based thing, is when you get into a trade on the RSI2 extension and price pushes in your direction and you get out, RSI2 is extended. So you get in. Yeah. So it's as close as you can get to an always in strategy, meaning as you can see on here. We get in RSI long, we exit immediately, same day, because RSI was extended to the upside as we got out because it pushed up, we get in and we flip short. Exactly the same as the banks and institutions do with their moves. Yeah. So when I keep talking about them hitting liquidity, which triggers limit orders, the people that get pushed back who went long here flip short. They don't stop out. Yeah. They don't get out the market. They flip. Banks and institutions are always in traders. This does the same thing. It's an always in strategy. So you're either long or you're short virtually all the time. Which means that as long as the market is using market structure in its moves, or it isn't moving, you are always making money. Yeah. The only time this gets hurt is in squeezes, but we're not holding positions. And we are also getting out very, 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 very quick. So it's a scalping strategy. So you won't be holding trades for anything more than 3-4 days, which you'll see. Yeah. So you see the scale out there. So entry short rather, didn't work out. Second entry didn't work out. Out the first one, jump ship fast. ADR, it's gone. We're off. Next trade, which is these two combined. Now this particular variation I'm running is scaling out 75%, which is a test I'm running. So you either scale out 100%, i.e. you close it, or you scale out of the vast majority of it and leave a little bit on, which means your exit is easier. But look at that exit on that range. We're forming a range high-low. It allows you to get out on the range lows. Yeah. So all these instances, like with the euro pound, where I got in, it dropped, I got in, it dropped, I got in, and then we sat through that for 2 months. This exits those. And it would also get you in and out and in and out and in and out multiple times as well. So it's designed basically to play the current market conditions. So it's got a lot of potential. And as I say, it's not a secret. Larry Connors rather. There's so many Larrys in this game, isn't there? Larry Connors traded this very successfully for decades, and it still works today. A lot of people still trade this on the S&P 500, Warren Buffett being one of them. So as you can see, look, in any market condition that is range bound, and I don't know what the ADR was at this particular time, but you're looking probably at a 1 to 2 ADR range there. Very similar. You know, I'll keep saying, why are we not moving any more than 2 to 3 ADR? Yeah, this is exactly designed to extract money out of those market conditions. It just gets in and out. So you're in, you're out. You're in, you're out. You're in, you're out, you're in, you're out, you're in, you're in, you're out. I can make a song out of that. You're in, you're out, you're in, you're out. You're in, you're out, you're in. Yeah, it's just market movement. It's exactly the same strategy that I trade, which is elastic band strategy, except we get out super, super, super fast. So you're scalping. So it's an intraday scalp, but it will not allow you to get into too many positions at once. Yeah. So it's a fast moving strategy, as you can see, and it will take losses along the way. But the P&L, as you can see, isn't too bad until you hit a strong trend. So when you get a news event that creates a breakout, you will get into that first entry at the end of that ADR news breakout. One of two things then happens. They mean revert and go. Happy days. We're fine with that because we're also then going to get in long and go with it. Or it accumulates and breaks. Those are times when your P&L takes a hit. But the market spends 70 to 80% of its time, and always has done, doing this. At the moment, it's spending 95% of its time doing this. So it's just a way of looking at the same strategy, mean reversion, and using the position trader EA to do the same thing using a time frame that is reliable, 4 hours, and using an entry time frame, obviously, we can get into quickly, but getting out as if we're a scalper. So not holding positions. This is kind of position trading without position trading, because it's position trading without holding, which is not what position trading is. So I I haven't adapted the Position Trader EA. This is the bog standard Position Trader EA. It's just the settings in it allow it to do what it's doing. So it needs more testing, and I need to extract the data. So see, there was 2 losses there, and then an exit. But look at the time. 1, 2, 3, 4, 5 out. Week. You won't hold for more than a week because you'll be taking losses. It's kind of like a hybrid stop loss strategy, isn't it? But we're not. I'm scaling out of virtually everything if we're wrong, which is a very, very different way to trade, isn't it? But so I need to get all the data out, stick it into strategy quant, and get a total portfolio P&L and profit curve to see what the drawdown is. So the problem with the strategy, as always, there is always a problem. The problem is drawdown. So this particular example here, you won't be able to read any of this. Wow, that's big writing. Problem with this strategy is drawdown. So this is a 50k test because this is what I would be trading with potentially. The profit you can see here, obviously this is just one instrument, ranges from 40 grand, 50 grand down to 30, 46, 25. So worst case scenario, you're looking at around about a 20%, 20k profit with around about a 7k drawdown. But drawdown ranges from 7 to 20, 30k. So as you can see, the drawdown is lower than the profit on every example. I haven't done a detailed analysis yet, but just eyeballing this, there isn't an example where the drawdown is higher than the profit. So your return is not going to be huge because you are taking constant losses when you get out of that market condition, which is nice. Yeah. So, but the return on drawdown is very, very, very healthy. There's very few that there's one. I was going to say there's very few that have a return on drawdown lower than 1. So that return on drawdown lower than 1 means that the profit produced was lower than the drawdown on the account. Yeah. So from a account safety perspective, this is the sort of strategy you are going to get big drawdown on. Yeah. But you're going to get fast results. So you can see obviously the drawdown numbers here on a 50k account is roughly somewhere around about the 20% mark, somewhere between 10 to 20%. So this is what I need to test in the strategy quant portfolio analyzer, is to see how often you get the drawdown happening on multiple instruments at the same time. So the testing that I'm doing at the moment that I've done is Aussie dollar CAD, pound. Can't see that, can you? Just move that down like that. So the testing I'm doing at the moment, I've done Aussie dollar CAD, pound US dollar, euro pound, US dollar CAD, pound New Zealand, and New Zealand dollar, US dollar. So the exposure there is double New Zealand, triple US, single Aussie, very similar to the New Zealand, triple pound, single euro, and double CAD. So I'm going to do another euro pair test. So the exposure would never really be more than 2 currencies at a time. And don't forget, this is an always in strategy. So if you are in, you could well be in the other way on the same currency at the same time. So it won't matter which way that currency goes. Yeah, because you've got 2 currencies pushing and pulling. Because we're only using 2 candles on the 4-hour time frame, i.e. an intraday 8-hour or a session move, sessions can go in the opposite directions very easily on the same instrument. Yeah. So you could have US dollar yen going through the roof and New Zealand dollar yen collapsing through the floor, because the New Zealand dollar has had different news to the US dollar on the same day. The yen exposure is both directions. One of them makes money, one of them doesn't. Or rather, one of them profits, one of them goes into drawdown and then profits the following day. Yeah, so they both make money. Yeah, so because it's obviously the market cycles up and down all the time. So that's the theory behind the strategy anyway, and that's what Larry's been or did. But because he traded S&P, he used a moving average filter. So for him, obviously with the S&P 500, we know the S&P 500 is a trending monster, and it spends the vast majority of its time doing nothing but going up. Forex markets are not like that. So at the moment, I'm running all tests with no filterage. So I'm not filtering anything on the strategy at all, because we're not looking for a trend-based strategy. He was looking for a trend pullback strategy because he had something that does nothing but trend. We know indices go up. That's what they do. They're designed to, manufacture to, and 99% of the time, that's what they do, apart from obviously COVID recoveries, which we've never had before. So markets are returning back to that state. But with FX doesn't do that, especially on high liquidity pairs like pound US, euro US, pound New Zealand, anything that has either an Australasian and European cross or is high liquidity, i.e. the top three, euro, pound, US. Yeah. So they move up and down an awful lot more because you've got push and pull coming from institutions constantly, which suits this short-term strategy down to the T, doesn't it? But things do go into trends. So I need to do a little bit more analysis, but for the 4 year I've done, which is post-COVID, it's fine. So the next test after I'm going to run 2 more FX tests. Then I'll do a portfolio analysis on it. They've had system parameter permutation tests done, but I will do more. But then I'm going to take those tests and run them on the 4 year prior COVID to see how they sustain themselves there. I'm 99% sure they'll be fine because this is a proven strategy. But it's using a variation because this is a daily strategy. It's a daily strategy. Yeah. So, and it'll work fine on the daily, but, and it will give you an awful lot more entries. But, and the reason I say I've come back to this, and it's a strategy I've known for years, is because I tested this on FX and it doesn't work. The reason is because it's a trend pullback strategy. And I tested it on the daily. I tested many different permutations of it on the daily, and it didn't work. But I didn't test it as a position trading strategy. And again, this is the beauty of the position trader EA. You can take any strategy you've ever learned in the past that was good, but didn't quite work, turn it into a position trading strategy, and all of a sudden it becomes profitable. Yeah. So, and Larry Connors was not an advocate of using stop losses either. So, I've just bent it, if you like. But like with everything, it looks good on paper until it doesn't. Yeah, you're going to get instances like this. Here we go. Yeah. So your P&L is going to take hits. So that was a fair old drop and a fair old drawdown. Nothing you can do with that. But this is all you need to get out. And this is using this is an aggressive setting as well. So you can, and this is also risking 1% as well. So this is very high risk. Yeah. Drop the risk on this. The drawdown is not going to be a problem at all. So I'm going high risk because I want fast returns. But obviously there's many settings you do. So all I will do is I will test this and then put the set file out there and you can test it yourself. But it's no different to what I'm doing at the moment, what I've always been doing, except it's just I'm looking for something that's faster because as we know, we are just stagnating at the minute because of RSI. Yeah, it's just not getting there. The 21. And there's a lot of other RSIs you can try. But the reason I jumped on the 2 is because I wanted a 4-hour strategy, and it's as close as you can get to the daily. So, but yeah, anyway, I'll let you know on it. I've been working on it for a couple of days now. It's one of the reasons it popped into my head again was because Forgotten his name. Gone. The guy from Stat Oasis. I've completely forgotten his name. He put a video out on it a few days ago. And I saw it fly past on my timeline, and I was like, oh. So that's the reason I jumped back on it, because I thought that would work, because it's a scalping strategy. That's what I'm looking for. But I'm looking for something that is adaptable to position trading. You just got to get the time frames right. That's the key. Time frames. So 15-minute time frame, 4-hour RSI. So we got that nice spread between time frames, which gives us an opportunity to find the extended condition and find the quick exit, entry and exit within that extended condition. So we'll see. But I've got to do more testing. You go and test it yourself if you like. It's just basically RSI 2. Very, very, very simple. So it's obviously the risk. There's no lot multiplier either. I haven't tested lot multiplication yet. So there's no lot multiplier. It's just get in and get out. Half an ADR entries, half an ADR, 0.5% targets, half an ADR, and a 0.25% target, quarter ADR with any multiple positions. So what we're saying is get in if you're right, get out with half an ADR movement. We know the market spends over 60% of the time, or 60% of the time, within ADR. So we can achieve a half ADR very easily. If you need to get in twice, we're going to get out after an ADR. So let's drop our target down to just a quarter of an ADR of movement on these two positions to get out fast. Because what we're going to do next? Flip. Yeah. See, because it's going to always in flip, you've got to be in and out super quick. So you cannot use big targets. You're not going for big runs, 2-3%ers. You're in, out, done. In, out, done. Switch. In, out, done. Switch. Constantly just milking money out of this ridiculous condition we find ourselves in the market. And drawdown control. So this is currently set to, forget that 2. It's not 2. It's 1. And it's closing out. See, this is not the test. This is just what I had as entries. But the condition to get out is either 75 to 100% of the trade after 1 ADR. So we are risking 1% over 1 ADR of movement. If it moves 1 ADR, we shut it. Either all of it or a percentage of it. And we are scaling in on half ADR increments. So the idea is you will only ever have 2 positions on. By the time you get to entering your third, that one is closing. So you will only ever have really 2 full positions on and small parts of old ones if you use that. But again, all the testing has shown that they all work. However, there's variations, big variations in drawdown. So if you look at this one, for example, the pound US dollar, I'll just show you quickly the profits on it and the ranges. So we've got, if I sort it by profit, so maximum profit achieved was 66K with 34K of drawdown, 59K with 30K, 55 with 20, 47 with 20. Yeah, so you can see the drawdown gets smaller most of the time as we get less profit. You get the odd outlier. You're always going to get an outlier. Remember the bell curve I keep talking about? Yeah, these results not going to be achievable. These very likely to be achieved because they fall within the majority of the thing. So if you knock the last 10 to 15% off that end, 10 to 15% off the top end, and take something in the middle, likely to play out. So that always looks like a every time I draw that, I do that. I don't know why, I just do. But that's what a bell curve is. So yeah, so you can see there's a massive variation in the profits of there's only 32 runs been done here. Every single one of them generated profit, but the drawdown is a massive variation. Yeah. And it's based on your starting drawdown target. And I'm only testing 2 at the moment. I'm getting out quick or I'm leaving it. There's loads of other, you could do as many tests as you like on this, but I want to keep these tests fast and simple because I want to try and roll this out fast because we're coming into summer trading as well. So this is the bit that is important. As you can see, the drawdown amount that you close, if you use 25 to 50%, you get higher drawdown. So if I switch this to sort by drawdown, smallest, you'll find that it says if you close out 75 to 100% of the trade, when you move to 1 ADR, that is where you're going to get your smallest drawdown. But you're still generating very nice profits. So it's all about, if it hasn't worked, cut it. As we know, cut your losers, let your winners run. That's always what you do with a stop loss based strategy. And this is a variation on a stop strategy. So it's got loads of legs. But obviously it needs more testing. But it's using RSI2 on the 4 hour. Test it on the daily as well. You could use hour entries, 30-minute entries maybe, but 15-minute entries will work just as well. So there you go. I will let you know once I've completed my testing what the results are and obviously what the settings are, because it's just going to use a position trader EA to do it. Not sure how true, but I came across some interesting info yesterday that large institutions are adapting AI into their algos to recognize speech characteristics during news speeches. Wouldn't surprise me. They've got the money, haven't they? It's not as if they're short of a bob or two. They can afford to do what the hell they like. I know the police are using that a lot, or adapting, or are, working on it a lot. You get someone who's being interviewed for a crime. It's all it's doing is replacing the polygraph, isn't it? The lie detector. Yeah, you can pick up speech patterns which tell that people are lying. So hopefully it won't be long before they do that on YouTube, and then everybody that's selling a Forex course, it will automatically flag them up. Brian, only manipulations I worry about what I worry about are Satan's lies while I trade. What? Some playback speeches backwards to find secret truths. That's an old thing from in my day when I was a kid. You used to get records, and if you wound them backwards, they would speak. I reckon there were some musicians that put that into their lyrics so that when you wound it backwards, it would always say something. It is a thing. We don't use records anymore. Always in strategies like this can at times make some crazy gains. Yeah. The time always in strategies there's a lot of moving average always in strategies. Yeah. So the banks and institutions use always in methods and position trading. Yeah. So that's exactly what they do. They are scaling into positions, and they will have a point where they flip the position, but it will be a point where they can guarantee a move, because obviously they move the markets. This is why you cannot beat the markets. You have to just ride the markets because they control it. They will always make money. You never will unless you ride what they're doing. So as long as you know where their orders are, support, resistance, propulsion, yeah, and as long as you don't use orders that guarantee you a loss, ta-da, that's how trading works. But yeah, there's a lot of very well-known moving average strategies which are always ins. Again, I've tested them all. And the problem with moving average strategies, as I've said many times, is moving average lag price by X. So on the chart right now, you can see two lines. They are lagging price by 72 candles and 24 candles. They are showing you what the price has been doing on average for the last month and quarter. How does that help us today? I can see what it's been doing for the last month and quarter because it's printed on the screen. Yeah, this is the beauty of this indicator, is it shows you the relative strength for the last 8 hours. Brilliant. Yeah, right. What's it been doing for the last couple of hours? Okay, well, they must be knackered. That's the theory. It's exactly the same elastic band theory as I've always traded. But if it's not going, the time to get from here to here It's 2 candlesticks. So if you get in here and you get out there, you need to get in again because it's gone up and now it's coming down again. It's very simple, but it works much better on a daily. But then again, you know, I'm looking for something quick. Day slows everything down. If you look at it on the daily, we're looking at taking what, 1, 2, 3 days, 3 to 4 days in a trade, whereas on the 4 hour we can be in and out the trade intraday. That's the key, intraday. I do not want to hold any positions as long as I can possibly manage it because they cost too much money at the moment. So this here, I mean, look at that euro pound, right? For the last 1, 2, 3 months. License to print money. No. But then go back out and look at periods like that. Very hard to print money. These are your P&L doing that. Here, your P&L will do that. Here, I mean, this is COVID and stuff, so you can't really, that's COVID. I mean, that's just irrelevant, isn't it? But that's the period I've tested over. That is the test period there. From there through to there. That's what's generating the alpha. So it did fine. And that P&L drop was there that I showed you a minute ago. That's that going wrong. But all this stuff, it's not got a problem. It's lovely. But what's the next 12 months going to hold? We don't know, do we? So ideally, I will run this alongside normal. So as I've been saying for the last month, I'm looking for diversification at the moment because we are struggling to get RSI extensions on normal timeframes. So we need to diversify. Otherwise, you die. You've got to change and adapt. On the exports, do you have the stats for, on average, how many trades it gets into per position? I haven't tested that. It's running. Scalpers market these? Yeah. I'm a gorilla. If you say so, Franco. Just set it to 4 RSI. H1 picked up a quick 50 on the test scalp. It's easy, isn't it? Trading Buddy in London did this. Did very well scalping till MI5 took him away. Yes. Satanic Panic in the 80s. Yeah. Is the 4 hour 2 RSI possibly similar to just using 30-minute 21 RSI? No, because the 21 RSI is smoothed over 24 hours. The 8 hour RSI is what we're trading here, which is a session. Yeah. So the idea behind this is Asia, you will get an accumulation. So what happens is, obviously we know we get accumulations in Asia. In the Asian session, we don't do an awful lot. So if the day before you've had a big strong move, your RSI will be extended. So that 8 hour period in the New York session will be extended. We won't do much in Asia unless you are trading in an Australasian pair, Aussie or New Zealand. And then in which case it will either work or it won't. But most of the pairs we trade have very quiet Asian sessions. The London session will then do nothing or it will move. If the RSI, if the move is up in your direction after the previous day, you make money. If it isn't, you get an opportunity to add a position and wait for New York to unwind the 2 sessions that it's dropped. Its session, London's session, and then the New York unwind the following day. but it only has to unwind if you've taken 2 positions by a quarter of an ADR to exit, which is why you'll find the vast majority of trades you are in and out within 48 hours with a maximum of 3 positions, because it's the natural ebb and flow of the market. Yeah, they are short positioned, handed over to Asia. London have dropped. They have added to short positions. They are over leveraged short and need to profit take a percentage of that move, which is what we play, which is what the RSI is measuring, intraday session movement, which is why it works on the 4-hour time frame. The daily time frame is, and this is again, his strategy. This is the thing you got to get about his strategy. Connors was a stock trader, so it was all about buy only. There was no sells involved. It was buy only. Although it was adapted to bear markets with the 200 moving average, but that's what we do on the S&P, and we do on all stock indices in general, and all stocks in general, really. But it could be, try it. But if you drop down to the hourly and you drop the RSI on the hourly to a different level, and I'm using the median instead of the close, it really doesn't matter. I've tested that already. But 30-minute 21 look, you had an extension there. Oops. And you had an extension there. So if you switch up to the 4, yeah, the 4 got you extended here. It also got you extended there, but it was way already extended there. So, I mean, you could possibly use that. I don't know. But the trouble with the 21 is it's smoothed, isn't it? Yeah, we're looking for almost an Arun up-down type move. If you're not familiar with the Arun up-down indicator, it's a very spiky indicator. Yeah, but it doesn't use relative strength. It uses different measurement techniques, which are just rubbish, which is why nobody uses it. But so yeah, it may well work with some more smoothed measurements. But don't forget, we're looking for the jerky movements intra-session here. We're not looking for what's happened over the last 21 4-hour candle or 21 30-minute candles. So you're saying we're looking at 11 and a half hours instead of 8 hours. There's not a lot in it, is there? So, but you know, you could test with any type of RSI really, but it's got to be quick. We're looking at quick. I'm not interested in that. Yeah, I've got that. I'm using the 21 hourly and the 14 4-hourly to achieve that. What I'm looking for is spiky, scalping, in out, because this at the moment, the market is finding it hard to find extensions apart from news, and they're working beautifully. Look, there's a lovely RSI extension on the 4-hour, on the hourly there. Both of those were 4 and hourly RSI extensions. Yeah, so that trade there was an H1 M5 mean reversion short, beautiful. But they're just not happening much. That's the problem, isn't it? There's nothing wrong with the strategy. It's the opportunity at the moment we're struggling on. So I set it to weighted close. I don't think you'll find, I mean, I haven't tested it, but there's very little difference in weighted and median, and using close. There's very little difference in close as well. What the position trader EA does is it takes a measurement every 15 minutes of this time frame, yeah, of the 4-hour. So what it's doing is every 15 minutes is saying, is it above? Yes. Then we're going to monitor for bear moves. So whether you use weighted, median, or close on the instrument, it's not going to make any difference. It'll make a slight difference, but we're playing ADR. Yeah. So we know that 58% of the time the market spends its time within average daily range. So the strategy is when we've had a move, yeah, see if you can get a half an ADR movement out of that 58% edge. If you couldn't and you needed to get in again, let's see if we can just get a quarter of an ADR edge, reduce our edge. Yeah. So we're looking for in, out, thank you, or in, not quite what we wanted. Let's just try and get out with a tiny profit. Because we're going to get so many trades, so many opportunities. Look at the trade count. There's 1,022 trades over 4 years. Yeah, this is trading once or twice a week on some instruments. Yeah, it's very, very, very regular. So you look at that P&L. Stagnation, drops, profit. Doesn't do an awful lot there, does it? Then it makes all its profit there. Other instruments are making really good profit there, but not as much here because obviously it's to do with the market cycles. When the New Zealand dollar is quiet, it's probably going to do quite well. When the New Zealand dollar is rowdy, it's not, because it's a mean reversion range bound strategy that doesn't work in trends. Yeah, so we're combining it with stuff that trends strongly tends to do that. This isn't going to be quite as good, but stuff that doesn't, this is going to be fantastic. So you combine this with normal position trading strategy, you've got two market conditions covered. So one will probably work well when the other one is meh. Just trying to offset this current loony market we've got. But we will see. I need to put a portfolio test together really to make sure it's not got too much correlation. Because if it's all correlated towards the back end if it's all correlated, all the profit appears in one portion of the year. No use, is it? Because it just tells us it doesn't work all the other time. It's got to have periods where we've got profit constantly, and it doesn't matter if there's losses in there, as long as that profit's there. It will either stagnate or make money. That's the whole idea of a portfolio approach, which is what position trading is all about, portfolios. If it hits 90 and 15 RSI sell boundaries, you can't use 90 and 15. You have to use the same. So it's 90-10. If you use an odd number, that's curve fitting. You can't curve fit it. You've got to be able to use the same amount of movement up as the same amount of movement down as a measurement. The indicator, or the instrument, in this case the RSI, is measuring relative strength. So you can't say, you're basically giving yourself a bias. If you're using 90 up and 15 down, you're saying you don't have to pull down as much as you go up. Yeah, you've got to be pushing and pulling at the same strength in both directions. Otherwise, you're curve fitting it. You will always be able to find an RSI setting different on the top that works better than the one that's equivalent on bottom. So the 70 and 30, you'll probably find maybe in some markets, the 70 will work there, but the 10 will work better down there. And you'll go, all right, I'll use the 10 down there. The only reason the 10 works better down there is because it's been in a downtrend. The down pushes have been stronger. When it's not in a downtrend, that 10 will never work. Yeah, you've got to use equal measurements. Otherwise, you're going to get curve fit results. Thinking of dropping to 70 RSI gets you into more trades. That's what I am in now, 70. So this is using as well, these tests I'm doing are using 70-30, very conservative. So if you look at the RSI 2, I've got the 70-30 on here. If you use Larry Connor's settings, which are for stocks. So I haven't tested this yet. I'm using 70-30 because I want as many opportunities as I can get. But that is 90-10. So there's a 70-30 there. There's a 90-10 there. That's marginal. There's a 70-30 there. There's a 70-30 there, but you didn't get a 90-10, so you missed that. But the 90-10 got you in long here, whereas the 70-30 got you in long there. Sometimes it's better, sometimes it's worse. We know that. In this case, you would have taken 1, 2, 3, 4 trades probably, and you'd have closed out that. You'd have closed out a portion of that, but you would have made it on that. Yeah, so that would have been a losing week on this one instrument. But the difference between the 70-90 may have been profitable week because the 90 got you in later. But if you look at each, because each of these dividers is a week, so you've got one, sorry, let's look at the 90s. You've got 1, 2. It wouldn't trade on these. It would have to be here. 3. So you'd have got in long there. You'd have got in short there. You'd have got in short here. That would have been a scale in. And out, obviously, on this drop. So that would have been good on the 90. You would have still been in that trade at that extension. So that would have been a second entry there. You'd have got in here. Had to scale in. This isn't part of the test, but this looks like a losing run. You'd have got in there. I can't measure what ADR is. What's the ADR on the euro pound? It's about, that's 36. The 36, so that whole move there is 66. So that's less than 2 ADR. So you'd have been in 1. You'd have been in 2. You'd have been in 3. You'd have been out of a portion and exiting on this push up. So you'd be coming back to break even after 2 weeks, week and a half. Yeah. So again, it's going to have trades which aren't going to work exactly the same as normal position trading, but you've got to cut these. They've got to go, because if this thing trends and you're getting in on an RSI 2, you're literally getting in on an 8-hour session. So it's like saying, oh, London was busy today. Let's go long. You don't go long just because London had a down day. Not normally, do we? That's way too early. You need to, right, what's New York going to do? Holy crap. Okay. Oh, and the next London, we would be getting in after something like that on the hourly 21 or 4 hourly 14. On the 2, you'll be in the day. Every single day, every single week, there's multiple. This triggers all the time. That's what I mean. Your P&L, if you put this on 6 pairs, you will always be in 6 pairs. One way or the other, you'll always be in. The other thing I haven't tested as well, which is interesting, is multi-direction hedging. Let's run a test. I haven't tested this multi-direction to see what happens. Because obviously, multi-direction, it's got the ability to potentially take more trades. That's not good, look. Although I don't know what settings I'm using. Hang on. 1, half, quarter, 2. See, that's not right. It should be 1.75. And I don't know what to do with this. I guess if it's multi-trade, we could go 0.25 as well. So yeah, kind of a hedging variation on it as well. I've not tested that. To be honest, I probably wouldn't want to do that. I don't think it would work as well, but holding its own. It's in a hell of a lot of drawdown. Look, stuck in 3K drawdown at the moment, but it's banking all the time. There you go. Just got out of the drawdown. Now it's gone into more. Struggling, isn't it? Hedging's not the right thing to do with it. It's a scalping strategy. You don't want to be scalping. You want to be exposed in a direction. It's not losing though, is it? It's a couple of grand down. Could live with that. There we go. Nice little range bound run there. But the only downside to this, I think, which is something you're not going to know until you try it, is the frustration factor of sitting through this stagnation. If you get everything stagnating at the same time, it's going to drive you mental. A little bit like the last month. Well, quarter. There you go. So it's taken off now. So market conditions will have changed back into more range bound. So generating alpha during the range bound periods. This will have been a trend period. So it does work multi-direction, but whether or not it's as good halfway through the test. Let's see. But yeah, anyway, so I'll be working on that over the next few days and get all the data together. It's really fast to test as well with the Position Trader EA, which is fantastic. But a lot of people use this as well on very low time frames. That's getting hurt. Look. Just trying to think why multi-direction would affect it. I suppose you're doubling your losses in trends that don't work, aren't you? Because you're getting out too soon. If a trend goes your way with this strategy, because it's scalping, if you get an RSI 2 extension that does that, you make half an ADR, 0.5% on that. But on the trend, you lose constantly. So this, mind you, bloody, look at the speed of recovery on that. That was a really strong trend, probably a fundamental shift news event that caused a multi-week trend. And then that multi-week trend stopped and you recovered it all. It does recover, doesn't it? Very well. It's now going nicely. But this is the reality, isn't it? This is what really happens, not the profit curve like that. As I've traded 10 RSI in line with the 200 EMA on the 4 hour, taking extensions on the 1 hour and contra trend on the 4 hour extension, the propulsion gaps are also very helpful. Quite possibly. Yeah, I mean, you could. I mean, if you're going to you can manually trade this, obviously, with the buttons. But you might find, you know, there's a lot of instances in these back tests which you would go, there's no way on God's earth I am taking a trade on the RSI half an hour before FOMC. Yeah, this evening. You'll be sitting there now going, I know you're extended, but I'm not getting in. I'm not getting in before that because there's a 50-50 shot. So getting in manually, and obviously you can use the dashboard. So just change the RSI dashboard. Not using one-click trading, but use the RSI dashboard and just change the settings to the 2 RSI. And just take manual trades using the buttons when you want to. Because don't forget, this is an intraday scalping or rather multi-day, couple of days sort of scalping strategy. So you can do this, get in, and then not have it running overnight. Just take the trades yourself. Let's have a look at some at the moment. So Aussie CAD, we're above the 90 on the Aussie CAD, yeah? So 15-minute, drop down, forget the RSI, you literally hit the short button. But where would be the logical place to hit the short button on this one? Not really that logical, is it? It's not a brilliant... Oh, yes, it is. Yeah. Yeah. So it's extended there. Hit the button there. And then look what we've got. Half an ADR away. Or other, not half an ADR. About 3/4 of an ADR away. Yeah. Yesterday's high. Previous day's high. weekly high. This is this week's high. Going to get limit orders trigger at this week's high. If you get in here and it doesn't work out, you get in there, it doesn't work out, you're only looking for a quarter of an ADR, 14 pips pullback on a limit order off that high, and you're out with a quarter of a percent. But the reason for the trade is that. Yeah, so just use the buttons. Don't have to have it full automated. You know, so a lot of this stuff you could, you know, what happened there was interest rates changed on the US dollar, for example. You know that thing's going to go into a massive trend and you get a massive spike down, tiny little pullback, flag, and drop. Yeah, US dollar is going to be dropping for the next few weeks, guys. You do not want to be pressing that button, do you? But if that button happens, i.e. you get an RSI 2 extension to the upside, damn right you want to short it. Yeah, if you use your head, this could flatten out a lot of these drops, which is the idiot EA being replaced by the intelligent human going, there's no way. Like Euro at the moment, they're changing their interest rates in June. It's coming down. Yeah, stop pressing the long button on it. Yeah, if that was you pressing the long button, all of a sudden you're way more profitable, aren't you? Intraday. Starting the Asian session. Again, the beautiful thing about the position trader EA is it's got loads of settings in it. Change the start times. So I'm only going to take RSI 2s that occur outside the Asian range, starting at 8 a.m. in the morning in my case, on my broker, or 10 a.m. in my broker. Yeah, so filter out the Asian session, see if that changes. There's all sorts of things you can test with it. But it's a good mean reversion position trading strategy, I think, for what we've got at the minute. You know, stuff like this, it's just gonna love it. Look at it. I mean, it's just exactly what we need, isn't it, at the moment? Anyway, if there's an extension but no propulsion gap, or a gap that is not at least half an ADR or one ADR, wait for a better position. Yeah. If you're manually trading, it's obviously much better. T-hour trading, what you're saying, don't be a robot. Yeah, exactly. Use all your tools. Humans are intelligent. EAs are stupid. It doesn't matter what you backtest, how you backtest it. There is news events that come out as long as you are using your head and you're not a purely technical trader. There's news events that come out which you know you shouldn't be trading through. FOMC is one of them. So the RSI 2 today that made a loss over a period of a week and it took a 4 ADR loss, you weren't in it because you're a human being. You knew FOMC was coming and the market might go mental. Yeah, all of those losses in there can be flattened out. However, there is also the EA took that trade, you didn't, and it made a profit. So you miss out on that half an ADR of profit. Yeah. But again, moving average filters may smooth some of this out. I can't test moving average filters because there isn't one in the position trader EA. I'm almost tempted to code one in quickly to test it. We will see. It could be something that, I mean, if you look at this, and this is partly why I don't think it's a good idea to use a moving average. Look at the moving averages on here. Yeah. All you're saying is when we go that way, don't press the short button, but you miss all of that coming back down. So it's kind of horses for courses in a range. If we were trending hard like the S&P 500 does, that makes total sense. Be long only, doesn't it? So I don't think a moving average filter is really going to help it, but it's something I can maybe build something just as a test model. Afternoon ago, sir. You're late. I'm just about to go. Right, so let's have a look at where we are with the euro, US dollar. So US dollar's not moved at all off that news. So we're waiting basically for FOMC this evening. So 7:30 to 8 o'clock. 8 o'clock-ish this evening is when you should probably see some movement starting on the US. But at the moment, we're not going anywhere fast on anything, and we won't do today because obviously we want to hold today until we get the news, and then obviously we'll see if we get any news. We'll either get something or nothing out of the Fed. Let me just see how my hedges are doing. This is exactly the problem, isn't it? Look, so since the open on the NASDAQ today, we've done that. The open on the S&P, we've done that. Yeah. So that's this. You know what I mean? This is it. This is the market now. This is what we need to deal with. So that's made a little bit of money. That will hopefully break down and make some money. That plus that will pay for that plus a little bit of profit. It's always the way with indices. If you get 2 out of 3, you win. But at the moment, it's you know, we're an hour and a half into the session. We haven't gone anywhere. Yeah, but it'd be interesting to see a 2 RSI on that, wouldn't it? Think about. Right, I'll leave it there. I'll be back tomorrow. So tomorrow, basically, it's tomorrow morning because we've got the CPI for the Swiss franc. So that's really your only news tomorrow. Unemployment claims, you'll get a little bit. It'd be like this PMI today. You'll get a little bit of movement out of it, possibly, but your unemployment rate on Friday is the main unemployment news. So JOLTS didn't do a lot today. Unemployment claims, probably not. Unemployment rate, yes. So I'm going to come on tomorrow morning at 8 o'clock and have a look at the Swiss franc CPI numbers, because this is going to be a big indicator as to what the Swiss are going to do. That number is a big miss, i.e. it pops up hard. They're not going to drop the interest rates again on the Swiss franc. If that is a 0 or lower, there is an indication that they will drop the rate again when their next CPI comes out, which actually is not next month, it's the month after. So we've got a bit of waiting time, but that's going to be a potential big one tomorrow. So we'll be watching that. We could well get a big reaction off the Swissy tomorrow. I'm not in the Swiss anymore. In any major way. I've got a Swiss running on another account, but it's a hangover trade. So I'm not taking any new ones on the Swissy at the moment because I don't know what's happening with their interest rates. So yeah, we'll see what happens with it. But you could potentially have some big movement on the Swiss tomorrow. And big movement on the Swiss is 200 to 300 ADR, as we know. So it's one of those instruments that goes mental when it gets news it's not expecting, which they release regularly. So it's a bit of a shocker. So we'll be aware of that. If you are still holding your US dollar Swiss, if you had US dollar Swiss short, that could be your exit tomorrow. If that number comes out anything less than 0, that Swiss will probably disappear. Sorry, that will weaken the Swiss franc, which will rally the US Swiss. Yeah, sorry. So if you're in short on the US dollar Swiss because it's been doing that, you want that number to come out as positive. You want the CPI to bounce. So we'll see. But that's tomorrow's news. So I'll be on at 8 o'clock tomorrow. And we'll watch that. And then Friday is non-farm payroll, unemployment rate. So that'll be a good one on Friday. So we should get some decent movement there. All right. So have a good day. Anything else you need, let me know. I'll be in Discord or Telegram. And I'll be back tomorrow morning. Have a good one.